All right, let's talk about a company that's doing so much more than just moving money around. We're talking about a fintech that is literally rewiring the economic engine of an entire continent. Today, we're diving deep into Moniepoint, the powerhouse that's fueling the dreams of millions all across Africa. But, to really get a handle on their massive scale, we have to start with something small. Just picture this for a second. It's 2 o'clock on a crazy busy Friday afternoon. You've got a line out the door. Then, right when you get to the next customer, your little payment terminal flashes that dreaded message, network error. You try again, still nothing. The customer's getting annoyed, they glance at the line behind them, and they just walk away. For millions of small business owners in places like Nigeria, that moment isn't just a small hiccup, it's a recurring nightmare. It's money walking right out the door, it's a hit to their reputation, and it's a constant nagging source of stress. This isn't just one person's bad luck. It's a huge systemic problem that's putting the brakes on economic growth. So this brings us to a really critical question, one that every single person running a POS machine has to wrestle with. What actually matters more? Cheaper fees or a network you can count on? It's so tempting to go for that slightly lower transaction fee, right? Maybe 0.5%. But here's the thing. A super reliable terminal that charges, say, 0.6% is actually way more profitable. Why? Because just 1 hour of downtime during your busiest time of day will completely wipe out any savings you made on those lower fees, and probably a lot more. Now, there was one company that saw this exact issue, this huge gap in reliability, and they decided to make solving it their #1 mission. Moniepoint didn't just set out to offer low fees, they aimed to build their entire ecosystem on the solid foundation of reliability, giving businesses the tools they need to not just survive, but to actually thrive. So, did it work? Well, the numbers kind of speak for themselves. Every single month, Moniepoint processes an absolutely staggering $22 billion. And all that cash is flowing through more than 10 million different business and personal bank accounts that are on their platform. And the engine behind all of this? Get this, over 1 billion transactions processed every single month. The scale here is just wow. Okay, so to really put that into perspective for a full year, let's talk about a term you hear a lot in fintech, total payments volume, or TPV. Annually, Moniepoint's TPV is over $170 billion. That's what officially makes it Nigeria's single largest platform for merchant financial services, period. But here's the thing, becoming the biggest fish in the pond doesn't mean you can just relax. Actually, things get even harder. Being at the top means you've got fierce competition and you have to make some really tough choices about your business model, especially with big players like OPay and new, scrappy competitors like Supply Smart joining the fight. This is where we got to cut through all the marketing fluff. When you actually compare Moniepoint, OPay, and Supply Smart on the things that really matter to an agent on the ground, you see these huge strategic differences. Yeah, the transaction charges are pretty similar across the board, about 0.5%. But look at the device cost models and the network solutions. They are worlds apart. So let's talk about the biggest point of anxiety for these agents. It all comes down to this. With the target-based leasing model that Moniepoint and OPay use, that terminal, it never really feels like it's yours. You are under constant pressure to hit these aggressive weekly targets. And if you have a slow week, you could literally have them come and take away the main tool you use to run your business. Now, compare that to the one-time purchase model. The POS is yours, you own it, end of story. It's the difference between feeling like a renter and feeling like a true business owner. And this intense focus on what the user is actually going through, it's not an accident. It comes directly from the top. The co-founder and CEO, Tosin Enialunda, says it himself. We're obsessed with solving problems at Moniepoint. That's not just a nice marketing line, it's the DNA of their entire company. And this timeline just shows their journey perfectly. I mean, they didn't just pop up out of nowhere. They started way back in 2015 as a company called T-Mapped, building the boring back-end stuff for big banks. It wasn't until 2019 that they even launched their first product for businesses. Then you see these huge milestones, getting a real banking license in 2022, rebranding to Moniepoint in 2023, and then being named by the Financial Times as Africa's fastest growing company for 3 years running. And, well, that kind of explosive growth is going to get you some serious attention. They are backed by some of the heaviest hitters in global finance and tech. We're talking Visa, we're talking Google's Africa Investment Fund, we're talking major international investment firms. This isn't just about money. It's a massive stamp of approval for their entire business model and their mission. Inside the company, they actually call their employees dream makers, and they live by these core values. There's grit, the idea that words like I can't or it's impossible just aren't in their vocabulary. There's empathy, really trying to walk in their customers' shoes. And no ego. It's all about getting the job done, not about who gets the credit. This is the culture that's fueling that problem-solving obsession we talked about. Okay, so how does a strong internal culture like that actually translate into a real-world impact? Well, it becomes this incredible force that does way more than just boost their bottom line. It starts to reshape entire economies. Here's a stat that'll just blow your mind. In Onitsha, which is the largest market in all of West Africa, a place that has been dominated by cash for centuries, today, an unbelievable 2 out of every 3 face-to-face payments are made on a Moniepoint terminal. Think about that. That's not just market share, that's transformation. And here's the crucial part. When you solve that one core problem, reliable payments, it sets off this powerful chain reaction. First, it makes payments way safer. You're not carrying around huge wads of cash anymore. Second, transactions become faster, so no more wasting half your day just running to the bank. And third, and this is the real game changer, it unlocks credit. Suddenly, all those digital transactions become a financial history, a record that proves your business is healthy, which lets merchants get quick loans to expand. Which brings us right back to where we started. Moniepoint has become this financial giant, processing billions of dollars and powering the dreams of so many people. But as it keeps growing at this incredible pace, the biggest question is still out there. Can it remember that one individual agent sweating it out on a frustrating Friday afternoon? And can it keep building a system where network error is a thing of the past?